Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we are back with another episode of the Real Estate Investing Club. Today we have Matias Daroch with us from all the way down there in Chile, South America. I don't even know. Are you guys in the same time zone as us right now in the Pacific time?
No, not really. Pacific time, no. We're like 5 hours apart.
Really interesting. I guess I was assumed just because we're on the same coastline, being up here in Seattle, you down there in Chile. That we'd be the same, but I guess the coastline kind of goes to a slant there, so you're probably a couple hours ahead. But right on, Matias is here from South America. He focuses on Miami, single family, high end development, flips, built to sell is the strategy that they use, and so I am super excited to go into this. We can talk about a lot of things, permitting, finding land. I'm assuming is something that you guys work on. Building designs, all that kind of stuff. So, Matias, I'm super excited to jump into this.
Yeah, me too. And thank you so much for having me.
Yeah, absolutely. So I told you right before we got on here, our bread and butter when we start the show is to hear people's stories because everybody in real estate has a good story to share. So I'm sure you got a good one too. Why don't you take us to the beginning of your real estate journey? How'd you get started in real estate?
All right. Yeah. So just to be super clear, I'm an architect. I studied architecture here in Chile. Going a bit more years behind. I did grew up in Miami for a few years when I was very little, up to like was 7 or 8 years old. So my family always got connections in Miami, and I went back to Chile, studied, finished my degree, and an amazing opportunity came to me, and for my family actually, and I was sent down up to Miami to work on the family real estate business. So we wanted to start with some things, single family, small homes, workforce housing, affordable housing, and that sort of stuff. And because of my architecture degree, it was like the best fit in the family for it. So that's how my initial steps were in Miami. We partnered with a local friend that was already working on it. And 2 or 3 years later, I got my architect's registration in Florida. So I was now able to not only work as a developer and real estate, but also be an architect and this be the designer of these projects myself and able to sign them and have my own time and not depend on others. So that was amazing. Well, I started that firm in 2020, the beginning, right before the pandemic.
Nice.
But we've grown a lot, and today we are a developer and investor focused firm for single family, high end and luxury markets that are also looking for contemporary style homes. So we work all the time with developers, and we understand developers, what they want, what they need, what information they're requiring, the timing, how important the time is, and I'm proud to say that we still work with developments ourselves and our own projects.
Very cool, man. It's so it sounds like your family was in real estate prior. Were they developers in Miami and in Chile, or what was the firm like before you joined?
Actually, no, I went down to start the development firm.
Okay.
But we got associated with a family friend, which is basically not my business partner per se, but we worked strategically together, and he went with us. He's the builder, so I learned a lot from him on the real estate part, and then with all the architecture part, I learned with another local architect. But Yeah, so the family real estate business started back in 2016 when I arrived in Miami.
Very cool. Um, yeah, so development is always, from the investor's perspective, it is nicer because the costs are much more defined. When you're doing stuff
Yeah.
like flips, you never know what's behind the walls. You never know, there's things that you just don't know. And so it's really difficult to create a true, scope that you can stay within budget and really understand the profit that you're going to come out on the other end. But that's not the case with the development. But with high end, high end luxury market of the single family residential, it's a little bit more risky. So what is when you guys are looking at development for high end luxury, what do you look for to kind of guarantee your return in terms of just what is your criteria? What's your underwriting criteria? Are you looking for how many high end luxury units are in the market already? Are you looking for specific areas? Take us through how you find your projects.
Um, it's a mix of many things for to balance it out, but we start with looking for certain locations and
Mm.
areas within the Miami metro area. We also trying to venture out to Palm Beach and Sarasota, which also has amazing areas there. But so that's the first part. And we would see an opportunity that is around the area or at the area. The first things we look at is the comparables.
Mm.
See if it's a gated community, or the good comparables are inside a special gated community or something that might exclude the small lot that's just the next street. Um, so, you know, it's all about research in the end, the due diligence and research. So that small thing is there. And then when we say, okay, these are good checks, the price is right, of course. And we use a small rule of thumb, which is that the price of the lot plus the has to be what the profit is we're going to get, more or less.
Mm.
So if the lot is the property could be a lot or something with a house is, I don't know, 100, and the cost of construction is going to be 300, we should sell it at least 500, so the cost plus
So
the
you
lot
want
price.
okay. So your profit margin is I can't do the math there. Is it like 20%? Is that what you're looking for?
Yeah, yeah,
Okay.
basically.
Okay.
There's a lot of intricacies about that. Then when we do the real performa, it gets lower or higher depending on a bunch of things. But that is like a first rule of thumb. Now, when we pass that, we start and we try to get the offer right away.
Mm.
So we send the offer, try to get it accepted as soon as possible. Because although the market is a bit slower today, the good opportunities go fast, way too fast. So
Yeah.
it's like if you don't jump right away, done. Just all that research you did is forgotten,
Out the door.
is for nothing. Yeah. So once we get that offer accepted, the architecture firm, meaning me and my firm, um, we do what's initial like architectural research, which we call the feasibility study, and that study and that research, which is purely research, nothing design. We still don't lift a pen. We go through the code, we go and see the site, we see if there's any like restriction that we could apply, like a tree or a swale or sometimes even a lamppost that a street post that could be complicated. Anything that we could try to foresee that is going to either take us time or money to put in a good design. Because once you get all the information, doesn't mean it doesn't work. It's just you go forward with that information,
Mm.
knowing that happened.
Yeah.
So the biggest issue we found is that you go into a project, into a development without all the information, and then you get a surprise.
Yeah.
And the surprise is either too late already or too costly. So it doesn't fit in the perform. Like you said, that's a good thing about development is while we get surprises here and there, uh, if we did a due diligence before and research, we can, uncover most of them. I won't
Yeah.
say all, but
Yeah.
most.
Right. So,
And
sorry,
if
keep
that's
going.
okay, we just move forward with the offer. Go ahead. Sorry.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah, I was just thinking, is there a reason that you guys focus only on high end, or have you guys also considered like workforce, areas in the lower price point market?
We did at the beginning, and that's actually how we started. It was our bread and butter, and we did a high end here or there. But now we've grown in a way that we've been able to have more consistent high end projects, which the margins are better for everyone, for the investor, for the architect, for the builder, for everyone. And the other part is that it gives you, it has, because the margins are better, any small mistake or any surprise that you uncover, you still are within profitable amounts. And while in the workforce, for one home or two homes, it's just one small mistake and it can cost you,
Your
you just
profit.
go over budget for yeah, your profit goes away through
Yep.
the window.
Yep, that makes sense.
Yeah.
So
That's
yeah,
unfortunate, but yeah.
Yeah, no, that's the case with pretty much anything in real estate is you're going for those higher price point properties. There's actually more security there because small mistakes aren't going to sink you, especially on the commercial side. Like when I first got started, I've told this story before on the podcast, but when I first got started in self storage, I thought, I should go for small self storage facilities because I can, there's not as much risk there. It's it's only a $200,000, $400,000 property. It's not going to sink me. But what I didn't realize is on those small properties with the small NOI, if you make a small mistake, it's going to wipe out all of your profit. And so there's no point. You might as well go bigger because there's that the scale, the size of the properties actually decreases the risk and makes it so any small mistake isn't going to sink you.
Completely agree.
Yeah. Okay, so you've already talked a little bit about finding the deal. Do you guys look for certain zip codes when you're finding land, or also do you only buy land, or are you buying single family teardowns as well?
We So for the first question, no, we don't focus on certain zip codes. It's where the opportunity comes. And opportunity, I mean, like when we find someone willing to sell at market or something below, because that's where your real profit, at least on the residential side, I'm not sure how commercial works, but your real profit is in the purchase of the property or the land.
Yeah.
And so that's the opportunity that we try to fish. And for the second question, tear downs are great because let me rephrase that. We look for properties or lots that have a house that we can finance. So now we can leverage the buying of that property and have 70. I think it's like 70% or 75%, if I recall right. Yeah, exactly. And we get that for the amount of time that we take for design and permitting. And then when we're ready to build, we change the loan to a construction loan.
Nice.
But if it's a tear down and it's on you can't loan it. I mean, there's no bank that's going to loan because of the
Right.
the
Because it's a teardown.
status of the property. Yeah, it's a
Yeah.
teardown, right? In that case, we have to reevaluate how much it's going to cost in equity and all that. But yeah, we prefer the lots that have a tear down or a house that's nice that we're going to tear down.
Yeah. Generally, how long does it take you to go full cycle from identifying the property, buying the property, doing all your studies, building out the plans, doing construction, and then selling it? Like, what is the full term that you guys do?
From looking at the property, I'm not sure, but once we get that, we close in a property, we go for a 24 to 26 month cycle,
Oh, okay.
including construction and sold and all.
So
The
2 years.
thing is that looking for that property, it could be
Yeah.
a month, a
It could
week,
take
or
it could take forever.
or a semester, you know?
Yeah. Yeah, it's fun. We've I've followed up with sellers for over 2 years before they finally decided to sell. So it's it's really
Wow.
hard to
Yes.
identify how long it's going to take you to actually get that thing under contract. Um, nice. Okay, so shoot, I was just going to ask you something. What was it? Uh, identifying the property, full cycle. Dang it. It'll come to me. Just give me 1 second.
No worries.
Don't remember. Oh, that's what it was. So high end, it's a lot different, it's different than, your workforce housing because you're going to have different amenities. What are the things that you generally need to put into a high end home, over a workforce housing that, make it meet that bar that a high end home buyer is looking for?
It's a completely different project from start to bottom. Typically the higher end have 2 stories,
Mm.
typically. I mean, 95% of the time,
Okay.
unless we're looking for a sector that, the community wants 1 story because it's an older community or whatnot. While the workforce housing, we try to keep it at 1 story always,
Oh, okay.
other reasons. Unless we're doing like hometown townhomes. I
Townhomes.
mean,
Yeah.
yeah, that way we go up. That is like the configuration of it, and we do more contemporary, so that means concrete slabs, concrete roofs, and that's something that we won't be able to do in a workforce housing. And then we got all the nice things, you can call it, like floor to ceiling windows and sliding doors, big ass sliding doors, with a lot of natural light, with a lot of view to them, this amazing backyard you're gonna have. While on the workforce housings, it's all about meeting the code,
Yeah.
minimum by code, and that's it. We when we did do workforce housing, we always look for to work on the design itself, like have it very functional
Mm.
and nice without it costing way too much. I don't know, like 1% or 2% more maybe. But all the rest of the elements, like the kitchen, the windows, the roofs, and all that, were minimum by code, unfortunately.
Yeah.
But yeah, and on the other side, high end, we're talking about the highest ceiling you can get, 10 foot, 12 foot, 14 foot. And the kitchens are, I don't know, it's like crazy today. The kitchens are 100 grand, 150 grand. I mean,
Yeah.
it's crazy.
That's crazy.
The amount of things you can put in the kitchen today. What else I can say? Yeah, workforce housing have like the kitchen and the fan and the dining room and the living room all integrated in one big great room.
Mm-hmm.
And I would say high end have them separated, where you have the kitchen with a family room, and then you got like a formal dining and living room separate.
Yeah.
Small things like that. Double height ceilings.
Do you put like pools,
Oh, of
rec
course.
rooms,
Yeah, I
stuff like
forgot
that?
that.
I was thinking, yeah, in Miami, you got to have a pool, right?
Yeah, there is no high end without a pool.
Yeah.
Um,
Yeah,
and
that
you
makes sense.
got pool, garage. Although the garage is depending on the location. For example, if it's a flood zone, and you can have a very nice carport, and almost like a store, like a dealership carport where you can put nice lights and a nice material so you can show off your car.
Mm.
So you either have that carport or you have a big ass garage.
Yeah.
I'm talking about 3, 4 cars in a garage.
Jeez. More cars than I own, that's
Those
for
are,
sure.
yeah. Well, those are for the bigger homes, of course, and we also have high end that are not that big that we would just put to a car garage, but always the pool, always the pool.
Always a pool. Makes sense. Here in Seattle, we do not have pools. That's not a thing that we quite understand. All right. That leads us to the quick question round. We've gone through our 20 minutes, so it's time to jump over. Are you ready?
I think so.
Ready or not, right? All right. It starts with education. It could be any form of education. It could be books. It could be movies. It could be Netflix shows, whatever. I don't know why I chose movies and Netflix shows as educational, but give me 2 recommendations, one for general life wisdom and then one for real estate.
General life wisdom, I would go with Atomic Habits, the book.
Oh, yeah. It's a good one.
Very good. There's another one that I really like that I just forgot, but okay. And for real estate, the basics to start for anyone who's starting, Rich Dad, Poor Dad.
The classic, the little purple Bible of
Yeah.
real estate.
And always
good
books.
Yeah. Good recommendation.
Audio format is also accepted. Sorry.
Say that again.
Audio formats, books,
Yeah.
it's always accepted.
Yeah. I love listening to things on audio because I just don't have the time to sit down and read these days, and so I gotta like put it in the earbuds and listen to them.
You and me both.
All right, next question is for your younger self. Let's go back to the Matias, who is just starting his firm back in 2020. He didn't even know COVID was a thing yet. Go back to him, look him in the eye, give him one piece of advice moving forward.
Start reading earlier.
Okay. Expound on that a little bit.
All right. I thought it was a quick question.
Yeah, we're going to long questions this time.
So I discovered the power of the books later in the firm, and I had read like 1 or 2, and I wasn't a bit avid reader, but it would have helped me a lot more at that time.
Yeah. And are you talking like
1 book a month at least?
Are you talking like professional books? Okay. Makes sense. It is crazy how reading can really stretch your mind and expound. There's this one quote. I don't remember who it's from. I don't really remember what the quote is, but the gist is that when you read, your world expands, and it never goes back to the same shape because you now have accessed different elements of the world that we live in. So I always like that because I felt like it was true. The more I read, the more perspectives I get. My world changes. The way I interact with the world changes. And if you haven't had that experience, it's great when you first get into books. That's for sure.
I agree. That's a nice one.
Yeah. All right. Next question is about the U.S. It's a big place, a lot of opportunity out there. And I'm going to say not the U.S. You can all of the Americas. You can name North America, South America. Just give me one metro, one city outside of Miami. We're gonna take Miami out of the equation. Okay. Give me one city that you're most excited about investing in today.
And investing out of Miami. Oh, that's a tough one. I'm not sure how to answer that one, but I would say only because of my knowledge right now, I would go with the West Palm Beach, Sarasota area.
Okay.
So Florida, west of Florida.
Yeah. I mean, Florida, all of Florida is a good market to invest in, so you can't go wrong there.
I think that's why I'm comfortable saying that because I know more Florida than any other state. So, yeah.
Yeah, makes sense. Do you invest at all in Chile?
No. In Chile, we are pulling out mostly. I never actually invested in Chile. All the investments on real estate were done in Miami, and
Hmm.
we worked over there, of course, but over here, right? I'm here now. Um, but no investments in Chile right now, and none planned for the future.
Is it just because of volatility? Real estate prices don't go up. I don't know. I'm going to be honest. I don't know a lot
Oh,
about Chile.
yeah, no, Chile right now and most of Latin America is in a big political volatile state. So there's a bunch of things happening right now, and it's going to happen for the next five years, I think. So everyone is actually getting out of Chile, and they're calling us to invest in Miami.
Interesting.
So we got a lot of Chileans coming to us.
Yeah, that makes sense. Was it is it Chile or is it Argentina who had the controversial president elected who eliminated the or no, he went to the dollar and he eliminated their currency, something like
Yeah,
that.
Macri. No,
Yeah,
that's Argentina.
that's Argentina. Yeah.
That's Argentina. Yeah, that's another topic.
Yeah, 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 exactly.
Yeah, but in Chile we have our own president too, which is hasn't give us much guarantees for construction. So they give permits and then they revoke him, and that's kind of breaking the real estate world
Yeah.
apart.
Yeah. If you can't trust that your permit is worth something, then you just can't move forward.
Exactly. Exactly.
All right, moving us on to the next question. This is about finding deals. It all starts with getting in contact with the seller, writing up that purchase agreement, and getting it under contract. So, what is your favorite way to generate leads and find good deals?
Okay, here I have to be honest. I delegate that part to realtors.
Hmm. Oh, that
And
that is your way. You network.
yeah, network is my net worth.
Yeah,
Um, I would say one of the other things I would tell myself younger is start networking. That's crazy, and that's yeah, it it's key to expand and sharing too. I mean, don't just say hi and be friendly. Share information here and there. That information comes back and it's much richer.
yep,
It comes really enriched.
yeah, absolutely. Yeah, the more people you help out, it's the faster your own career moves forward. But you can't do it
Yeah.
selfishly. You got to actually be helping people. But it is funny how life works that way.
Yeah.
All right,
Yes,
next
completely agree.
question is about lessons learned. Not every deal that we get into goes the way we expect it. A lot of times, a wrench is thrown into the mix and things go a little sideways. But in those experiences is where the greatest lessons that we learn are. So, what was a deal that kind of went a little sideways for you guys, and what was the lesson you pulled from it?
This was a while ago and a pretty big one. It didn't happen to me directly, but I was sort of there involved. Um, we brought in an investor that not only invested like in the equity, also invested in the loan instead of asking for a lender and a private lender or a bank, he he loaned the part of the property. So the thing was he wanted to sell to a price and the market wasn't there,
Mm,
and it took us an extra year to sell. And for those that understand the numbers, time is money, of course. That extra year ate all the interest in the loan that
mm,
he was earning himself. So at the end, the project was profitable, but he earned the whole profit, and we stood with nothing. We ended up with
yeah,
nothing. I
yeah,
think we broke even, but that barely, and he earned the whole thing. So lesson learned. Uh, Separate things. Don't put all their eggs in the same basket. Um, and and the other thing is there is no success without uh failures. And I mean, yeah, now I talk about a bunch of things that worked, but before that, a bunch of smaller things or bigger things didn't work. So Yeah.
Yeah, it's funny how, all those little failures, you forget about them. But
Yeah.
you definitely, once you have success, all you're seeing is your success. But there's all those small failures that happen along the way, that kind of act as stepping stones to where you are today. But yeah, I did a deal like that one time where I promised, the guy wanted more than I thought. This was right when I was starting, and the guy wanted more than I thought the house was worth. But I was just so eager to get a deal done. This was back in like 2015 or something, that I promised him profit on the end when I sold it. And this was when I didn't know much about flipping, and I didn't understand the costs well. And so it took more in costs than I had expected. The flip was more expensive. And so he essentially took all the profit on the end. And I was so angry. I was like, this is the worst. But yeah, that was a lesson that I have not repeated since then. So, you take it with you.
All the work for nothing. Oh,
Yeah,
God.
exactly.
Yeah.
All right, that leads us to the last question. This is for the listeners. You have given us a lot to think about. I'm sure people want to reach out, get in contact with you. How can they find you? And then what can they expect when they reach out to you?
So the best way is you can go to our website, mitarchitecture.com. There's more contact information there. But that's a pretty nice way to start. We have got a blog post there that with a bunch of information that you can go through. And if you contact us either by email or the phone, I won't assure you we're going to answer right away. But email, we'll try to get back to you in at least 3 days and see how we can help.
Cool. That is mikarchitecture.com. And I would suggest you guys go and check out their website because their projects look really nice.
Thank you.
I just like looking at architecture, nice looking houses. And these are some pretty houses. So good job, you guys.
Thank you so much.
Yeah. So that wraps it up. Thank you very much for hopping on the show.
No, thank you. It was very fun. So have an amazing weekend.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. As always, if you want to support the show, just give us a like, subscribe, share. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.